Several Wall Street analysts are rating this as a strong buy with an average price target well over 150% above its current price. BlackRock have huge investment in this Nasdaq penny stock, and Morgan Stanley have increased their shareholding by 900% so far this year. In fact, institutions now own over 40% of this company. According to one source, this company could be undervalued by up to 95%. The company in question is Aquestive Therapeutics, ticker AQST on Nasdaq, and is currently trading at just $6. Aquestive have upcoming catalysts that are likely to see this stock rocket up before end of year. The stock is currently on the up, having gained over 80% in recent months after hitting a 52-week low. If you've been watching my channel over the past few months, you will have seen huge gains that we have made recently, including stocks like ILUS, CYBL, AABB, PQEFF, and SAVA. With each of these stocks recently covered on the channel all making multi-bagger gains. So what are you waiting for? Hit that subscribe button now and stop missing out on these huge money making stocks. Turn on notifications and find out about these stocks as soon as I make a video, instead of finding my videos after the stocks have made huge gains. It costs you nothing, but this could make you a lot of money. This is not financial advice. I encourage everyone to do your own due diligence. Now let's dive into it. Aquestive Therapeutics is a pharmaceutical company that advances and commercializes medicines to solve therapeutic problems and meaningfully improve people's lives. They create innovative drug delivery technology and scientific expertise to redesign important medicines. They have developed a very innovative delivery technology called PharmFilm. This gives patients with complex dosing challenges a simple, non-invasive and more convenient way to dose, with no mixing, chewing or swallowing. This technology in time has the potential of eliminating all oral pills, gels and injections. This oral film could be dissolved on your tongue, which would avoid a lot of toxins and would be effective much faster. Aquestive has focused on applying its technology to address unmet patient needs in CNS conditions including epilepsy. The company's first proprietary commercial product was approved by the FDA for the treatment of seizures associated with LGS. The company is also investigating Libervant as a fast-acting oral rescue treatment for increased bouts of seizure activity. The key focus is to improve medications and outcomes for patients with central nervous system conditions. Aquestive have established a robust portfolio of treatments for CNS disorders and are advancing a late-stage pipeline with promising treatments for complex conditions. And this leads us on to the Aquestive pipeline, which is very impressive to say the least. And this is very important, so listen carefully. First of all, Aquestive already have 5 FDA approved drugs, so we know that this is a process very familiar to the company. First, I have Suboxone, which is a prescription medication used to treat opioid addiction in adults. This is EMA, TGA and FDA approved since 2010, as did Uplands. Exservan, which is used to treat ALS, and this is a perfect example of how PharmFilm technology is used to help meet the needs of people who have difficulty swallowing medications. This is in partnership with Mitsubishi Tanabe Pharma. Kinmobi film is a prescription medicine used to treat acute intermittent episodes in people with Parkinson's disease. And finally, Astaraz. Now this really caught my attention. This drug got FDA approval this year, and I remember this very well. This was launched earlier this year by KimPharm Pharmaceuticals. At the time prior to this getting approval, I made my first ever YouTube video about this. Check this out. Filter my videos in order of oldest and check out my KMPH video from February 22nd, my very first YouTube video. I still believe that this drug is going to be huge, so to see that listed here is a huge bonus. Because Aquestive have a license agreement with the Corium KimPharm team and will be receiving royalties on Astaraz. But that is not the focus of this video, so first off, Aquestive have AQST 108, 109 and 305, which are at early stages, but They have just reported positive top-line data for a phase 1 trial of AQST 109, the first and only orally delivered epinephrine product candidate. The results for 109 appear to solve the last remaining hurdle of AQST 109 absorption speed, or Tmax, compared to auto-injectors like EpiPen. So this could replace the EpiPen. This is massive. Their drug Sympazan continued to perform well in the third quarter of 2021, which marked its 11th period of quarter-over-quarter growth, which Aquestive feel that with their efforts on Sympazan has done a good job of establishing their footprint and continues to set the stage for the potential launch of Libervant. And this is the prime catalyst for Aquestive right now. Where Sympazan is commercialized for the LGS, Libervant is under review for management of refractory patients with epilepsy on stable regimens of AEDs who experience seizure clusters. Where Sympazan has had sustained growth over the past 10 quarters, it is seen as a precursor and will complement to Libervant, giving the company a solid 2-product sales force efficiency. And this has been a long time in development. The original NDA submission was back in 2019, and in September 2020, Aquestive received a complete response letter, or CRL. In June, the NDA was resubmitted, and the PDUFA date is set for December 23rd. This will provide a huge catalyst for the company. In my opinion, they have had all the time to make sure that they get this approved this time around. Remember that this is nothing new to Aquestive. They have been through this process before and have got other drugs approved. And they have noted that their team is continuing to engage with the FDA regarding the NDA for Libervant ahead of the December PDUFA date. Once this gets approved, they expect to launch in early next year. So what do the analysts think of Aquestive? 4 analysts have set 12-month price targets for AQST stock in the last 3 months. The average price target is $17.50 with a high forecast of 28 and a low forecast of 13. This average is 178% upside from the current price of $6.29. Looking at market beat, we can see that AQST is currently at the top of its 50-day range and still significantly lower than its 52-week high, which suggests that this stock is on an upward trend. And the market cap for Aquestive is now about $250 million, which is still very low in my opinion considering the upcoming catalysts. Institutional investors here include BlackRock, Vanguard and Morgan Stanley, with institutional ownership currently crazy high at around 40%. And we can see that the most recent ratings have been set by H.C. Wainwright and Wedbush, who have both rated this stock as a buy and given price targets of $14 and $30 respectively. Last week, research analysts at Wedbush cut their full year 2021 earnings per share estimates for Aquestive Therapeutics in a research note issued on Wednesday, November 3rd. Wedbush analysts now anticipate that the company will post earnings per share of -$144 for the year, down from the previous forecast of $129. Aquestive Therapeutics last released its quarterly earnings data on Tuesday, November 2nd, which I will look at in just a moment, but first a little more detail about the level of institutional investment here. A number of hedge funds and other institutional investors have recently bought and sold shares of AQST. Millennium Management purchased a new position in Aquestive Therapeutics during the second quarter worth $1.7 million. Morgan Stanley boosted its stake by 929% during the first quarter. Morgan Stanley now owns shares of the company stock worth over $1.8 million. Renaissance Technologies purchased a new position in Aquestive worth $974,000. Latash Investments purchased a new position, and Nuveen Asset Management boosted its stake in Aquestive by 43% during the first quarter. They now own stock worth $3.9 million after buying an additional 233,000 shares during the period. As I said a moment ago, over 40% of the stock is owned by institutional investors, and they are adding to their position, which is very good to see. Over on Simply Wall Street, they rate this stock as being 5 out of 6 on the future growth estimate, with a huge 69% forecasted annual earnings growth. While they have rated this stock as being 95.9% undervalued and placing a fair value estimate of $154 on the stock. Looking at the company's most recent quarterly report, which was released this month, we can see that they have total assets of $65 million, which is primarily made up of cash and cash equivalents of $31 million. In contrast to this, we can see that they have liabilities of $125 million, giving Aquestive a liability to asset ratio of about 2 to 1. So this is never good to see. It is never good to see a company's liabilities far outweigh its assets. However, this is common in this industry, because it comes down to getting drugs approved before these companies can see revenues. So for biotech and pharma companies, I prefer to look at liquidity and the current ratio. Aquestive has current assets of $50 million and current liabilities of $25 million. So that means that over the next 12 months, they actually have a current ratio of 2 to 1 in favor of assets. And then they have $31 million in cash, so liquidity shouldn't be a problem either. Looking at the income statement, we can see that the company has revenue of $39 million so far this year, which is in line with last year's figures. After deducting operating expenses, this gives the company a net loss for the period of $14 million and a loss of $41 million so far this year. Again, losses like these are to be expected in this industry. So guys, that brings us to the end of the video. If you've watched all the way through, then hit that like button. It really helps the channel out a lot. If you're new, hit the subscribe button and bell notification. Follow me on Twitter and I'll catch you in the next one.